And that finally happened. US 100 has broken a downtrend line. So it means that both are gradually stepping in. But what does it mean for you if you are currently outside of the market or if you are just began to invest? So thank you very much for tuning in. Those are the questions that I'd like to answer. Today transmission is live. So if you have any questions, any other topics to move, you may post it in a chat right aside my window. So I'm very glad to host you here. And at today's episode, we'll go through economy view, market outlook, about economic calendar, so on, so forth, and ending up with a trading idea. So let's head into next broadcast. All right, so economy view is naturally the first slide of today's presentation. So I will guide you through the macro view at first. What is the outlook on the European side of a market, and as well US alongside the Chinese and Asian totally. So let's head over to our next slide. That's a global container freight index that's about to normalize. So that's very important, as FBX stands for Freightos Baltic Index, if I remember correctly. So it's the leading international freight rate index in cooperation with some exchanges, as Baltic Exchange, where those containers are tracked. This eventually index has been constructed. So FBX is based on aggregation of data of global freight carriers, freight forwarders, and shippers. And that's the one indicator that many of shipping analysts are taking the decisions about the carriers based on. So a little over a year ago, congestion at those ports were making really headlines, where we have been reaching record highs in terms of cost of shipping containers alongside the time of shipping them. Right now, shipping costs have come back down to earth, with some routes approaching pre-pandemic levels. So this graphic shows just how dramatically costs have fallen in a short amount of time. So this widely recognized benchmark has fallen, as we can find, from over 10,000 to around low 2,000. So it's around 80%. And as what we can conclude, those rates has dropped to that extent to lower the inflation pressure even more. So if we want to be specific, some nations felt the effects of higher shipping costs more acutely than others. But if we just juxtaposed right now those countries together, we will find out that globally those problems should be fading away. So it's much better right now for global supply chain outlook than it was even few months ago, and even over half of a year ago, when we were talking about the possible headwinds out of the steel clogged this shipping sector. So right now, this one getting back to normal eventually gets us a chance for a quicker rebound of a economy globally. Just look at the shipping route out of East Asia to North America West, and it dropped over 50%. East Asia to North America East over 55. So those are decent numbers, those decent figures, and what we can also note right here that with China reopening, we still may have some issues with that pressure on the shipping industry, but I hope those problems will be faded away with recent perturbations. We'll finally, I guess, we'll get it done. All right, so what we got next? So we are wondering, as right now there is a risk-on environment where many indices are rising alongside European, Chinese, right now Nasdaq, Russell, all of them, also crypto finally. But when made it change, when the pivotal moment for this risk-on environment may take place? So we are watching as a benchmark for risk-on, risk-off behavior for Euro USD par. So right now USD is dropping, losing its purchasing power, whereas Euro is rising. So right here we can find that Euro area inflation is back to single digits, but as ECB claims right now, ECB is stepping down its way to maybe lower hike than it was previously. They may get down to 0.5 basis points, but still are expecting to rise it even further throughout at least 2 next meetings. So it means that also on March we might expect a slowdown in hiking rate policy of ECB, alongside with starting up a quantitative tightening that's expected to head on since March. So if we just try to take a parallel on what happened to US dollar, we may have found that when those elements has been introduced with quantitative tightening starting on back on June, and also those first signs of slowing down inflation has reappeared, we have found that right from then market started to teeter around the trough rather than dropping further. So right now ECB is somewhere in the ending time span of this hiking rate cycle, but I would expect that it will last maybe throughout a year, but market expecting that the slowdown of the process will take place already on March. So we may find out that this risk-on profile may extend itself to March. So we have by this I would say reassessment, we have around 2 months or 1.5 months of decent growth. So there are many market analysts that expect that tightening mode may be starting over with March. Some others claim that it may get a bit longer. So that period may extend from March maybe to April or even to May. But I would expect that the first quarter of this year might be somewhat positive. The ECB also we need to bear in mind that is focusing on core inflation, where right now they finding the no good news right there. So in underlying inflationary pressures show no signs of abating yet. That's why they would raise rates for further. Okay, so that's kind of a perverse title I made. Boom bust environment. It sounds like boombox environment. So right now we are in a very volatile environment where after this COVID pandemic crash, we have skyrocketed in indexes when those fiscal support started to flog the market. Whereas right now we have made a very difficult 2021 when it was the one of the most difficult year out of the recent 80 years, I guess. So right now we are rebounding, but the question is, when will equity indices price the current weakness in the leading data and eventual weakness in the hard data? So something that still is nagging us is this inverted yield curve that may be a harbinger of upcoming recession. Whereas right now we are expecting the markets to thrive after this lowering of hike interest rates process, but the more difficult time may come anyway. So the longer we are postponing it, the harder it may eventually get. So even if those shriveling stock earnings may be heading for valuations, the doom and gloom circumstance, the doom and gloom outcome may not take place, at least in 2023. And even if companies don't disappoint for the fourth quarter of 2022, it will be very hard to expect that EPS upgrades will come this and next year, at least. Sorry, I meant just this one year, but about the next, it will be a bit more, I would say, a bit more complicated in terms of assessment. So I would bet that EPS upgrades will not be found this first half, but the downward pressure on those companies has got us to that extent that we'll need this breathe out. So we have breathed in literally everything throughout recent prior year. Right now, something we do need is this breath out that may bring some relief to the market. In terms of S&P 500 operating earnings per share forward, we can find that right now this for 2024 is right now reverting, whereas this operating earnings per share eventually starting to meet this line. So we might be going through the time where those expectations are meeting reality, and that's the one of the processes, one of the time span where we might be finally building the base for the next growth. But for this one, we need still hang on for longer. As we can find right here, the S&P 500 forward PE is right now in a trough, and it nearly aligned the levels been found since 2014, 2015. So I do expect that this one still have some time to consolidate before the next leg up, but it will be very important to reassess it after those earnings period eventually end up next month. So we can find that we have formed a V-shape correction, and after the V-shape, normally after the correction, after the V-shape, we are forming normally a consolidation, and this consolidation may be breaking out of this consolidation may be indicative for where this market may eventually go, upwards, downwards. In my bet, this upward tendency is still likely by the end of this half of a year, but it still would need some time, at least few months, to make it through. So about any updates, I'll get you know in this transmission. So if you enjoy, hit the subscribe button. So that's why I do expect that stability will come up before another decision where to go. So right now we're heading to market outlook, and I've just put on a US 100 index, and as we can find, the liquidity, the amount, the size, I would say, of the liquidity that's been here built with so many touches of this level of 11 400s alongside with such of a decent volume profile as for the this medium-term bottom, we may find that the only one path, the path of the least resistance, has been of course to the upside, and that's why we have eventually managed to break out through this trend line, but there's no much of a room for optimism right now, as there are many of resistance above still. So we may get even to this level of this resistance, but we still need some proof that this break is sustainable. So for this one, I would expect it, at least for now, to build a base around this level of 11,500s up to 11,800s, and afterwards we may find a possible upward movement back to 13.75. But for this one, we need some longer time in my view. About your opinions, you may attach it in a chat that's going live. All right, so right here we are in a crypto outlook, and for today's session, I've decided to mention about Ethereum that's recently been rising more over 20 to 30% from the local bottom. So it means that the sentiment around Ethereum is getting eventually better. That's what we have been expecting throughout this recent time of our transmission. So what about the updates? So Ethereum acknowledged that Buterin, that is a founder, one of the founders and the most prominent figure at Ethereum, has suggested that Ethereum is getting maybe too much public, as we can with an ease track every single element that's go through the blockchain. So blockchain by its roots used to be a chain that supposed to be public, but also shouldn't be, I would say, too much trackable by third parties that I would say that don't have much of a I would say positive intentions for the whole system. So there are many Ethereum participants that want to send the money here and there without having having sent an information to the world that they actually do it. But on Ethereum blockchain, everything is transparent, everything is visible. So Buterin arrived at the concept of stealth addresses, where with usage of zero knowledge proof or other technology, he may send the coins or the informations from one side to another without any intermediary that may have a knowledge about the transaction. So there are many of elements that might be anonymized. We are talking about P2P transactions, non-fungible tokens, also Ethereum name services registrations that may protect users. So the new system can provide more privacy for user activities ranging from money and financial transactions, as well as non-fungible token transfers by allowing users to create those stealth addresses. So in the longer time horizon, this technology is about to increase the privacy of users to a large extent, and how it may look, it heavily is dependent on the technology that may be laid underneath. So right now, as we do know that many companies wanna participate in development of Ethereum, we may wonder how that may appeal to all those financial regulators and all those entities that right now are trying to backtrack from any of anonymity and also about some gear that is trying to shadow any traces of the possible third parties that might be somewhat dodgy in terms of the I don't know, the sending for instance laundered money or other type of crimes that would make. So financial regulators may be cooperating with Ethereum in order to make it regulatory compliant. So that might be the best option to enter to make Ethereum to enter the regulatory and also regulatory environment where those big money eventually lay. So Ethereum developers have recently raised some concerns about surveillance by regulators, since one of Tornado Cash developers was suspected of being involved in concealing criminal financial flows and facilitating money laundering through Tornado protocol. But right now, that should be I would say went through if Ethereum from the scratch will tell regulators what they want to do, and right after they will cooperate with them alongside. So that's very, very wise of Ethereum, I would say. On the one hand, they try to maybe not over, but upgrade the privacy of the chain, and on the other hand, they want to cooperate with regulators that might be somewhat um, cautious about the technology, but with a dialogue that thinks that upgrades, that updates may eventually find its place in a right pathway. All right, so right now we are going through market mover section, and for this one I need you to switch to economic calendar. So what we have right there for this week, on Monday, we have had ECB President Lagarde's speech. That's already what I've mentioned about. On Tuesday, we are going through inflation rate that's still on the way, but we went through already some PMIs out of the European Union and Great Britain. So it's barely lower than 50 points. So it means that market eventually is somewhat recovering. So it's giving us an insight in the nature of economic slowdown, but also giving us some hopes that it may eventually rebound. So that's about the Tuesday. About the Wednesday, we are waiting for Bank of Canada interest rate decision, and about other data I've mentioned yesterday. So today also inflation rate out of Australia, if I haven't mentioned yet. So that was economic calendar. What about the earnings calendar? All right, so for this one, we can find that Microsoft is it? Yes, it's today, as Microsoft is yet to deliver earnings. So we'll hit that news tomorrow's episode. In tomorrow's episode, Johnson Johnson was a bit lower in terms of revenue, but in terms of earnings per share, right now it jumped. So normally that revenue hasn't missed much, just $0.2 billion. So it's nothing we may worry about. So right now earnings season is not as bad as we've expected. That's why it's giving a fuel for the market to thrive. For tomorrow, we are awaiting the very important name. Don't forget it, Tesla. Tesla, they will given us an outlook for next quarter, and also given us data that may give us a reassessment on where we are right now. Okay, so that was a market mover section, and let's head on to trade idea eventually. So for today, I'm continuing one of the proposition for what I attached yesterday. The day was it Friday, I guess. So WTI USD is in a position to break out. So with this China reopening and with Chinese Lunar New Year, I do expect that should be enough determinant to push the WTI forward in its valuation. So WTI right now is heading to this very important, I would say, ceiling of 82.6. Sorry, I have switched the windows. I hope right now is fine. So WTI USD is approaching the ceiling that has been formed, and that's the one that should normally break higher, especially with its market pattern that's ascending triangle. Maybe it's not very clear, but it gives some resemblance to it. But I would focus mainly on what's the outlook out of the longer time interval. So right now we can find that we have quite significantly has broken out of the head and shoulders pattern that gives us an objective to around 92.7. If we have, however, agree that we have broken out of the triangle, the triangle that had been formed here with a first touch point at 1st December, and that was to the upper band line, this upper band line, and with a lower one at 9th of December. We can find that this objective that is taken out of the verifiability of this market pattern should get us right to the extension of this line to 97.5. So this another high might be reached this year. The question is in what time horizon. But the most visible market pattern that we should consider it right here is this inverted head and shoulders that giving us the extension of a move to 92.8 with the possible move from where we are right now at of around 13.4%. So right now the price is getting tighter and tighter, so it gives us a chance for breaking through. Also, yes, we can find it out at the ATR that's right now is dropping. So with this drop, we may expect another move to happen. In terms of trading idea and proposition of a trade, I would say, for me, it's everything around this where we are right now. So in terms of blue box, when the price, as long as the price remain within this box, I do find it's a great, so yes, I've corrected this one, but it's the objective one. So as long as the price remains inside of this 80.8 and 81.9, I would expect that's a good chance to enter the long position. In terms of trading board, it looks like the proposition looks like this. So we can find at WTI USD risk reward ratio with this pattern gets us to around 7.23. Yeah, I do expect that this breakout is getting more and more imminent. So as always, remember about your risk reward ratio, adjust it accordingly. You have to reassess every single time whether you haven't made any any mistake in terms of your preparation for the trade. And if you're looking for the confirmation, you may wait for breaking through this 82.5. But I do expect right now that it might be a also very good point to make an entrance. So in this episode, that's everything. Thank you very much for being with me, and as always, stay profitable and stay tuned for the next episode tomorrow, 8:45 a.m. East time. Thank you very much for being with me once again, and